Hello traders, welcome to the weekly outlook and setups volume 308. Iliya here, and as usual we're gonna have a look at the markets, how they developed this week, what kind of setups we had, and most importantly make some forecasts for the incoming week. Now we have some very big news for the incoming week. The US government is back to work, so we're gonna be getting a lot of news releases and potentially a lot of volatility. So let's have a look at the economic calendar first, and then we jump into the technicals. So unlike last week, which was pretty empty in terms of news, this one is quite packed. So on Monday, we're starting with some CAD news here, and then we're having USD news, but this manufacturing index doesn't tend to be very volatile. On Tuesday, we just have a Aussie dollar monetary policy meeting. And then on Wednesday, we're having FOMC meeting minutes. Now, the minutes, they're not as important. So basically, you can see we're having a pretty slow start to the week with we have GBP CPI here that is pretty important for the pounds, released pretty much around that should be Frankfurt open if I'm on the right time zone. And then on Thursday is the key because we're getting non-farm employment change. Now this NFP for which month is it? Let me see. Non-farm employment change now. Release delayed by 48 days due to the US government shutdown. So 48 days, what is that? That's a month. So is that the NFP? That's probably NFP for the previous month. Okay, so let's see how that is going to go. And then we have unemployment claims. That is too tentative. And then on Friday, we have a bunch of news here. We're having the PMIs. So the Euro, the German, the Eurozone, the GBP PMIs, and US PMIs as well. Consumer sentiments and this thing right here. So the very key highlight to be monitoring, of course, is NFP because that is already scheduled and that is going to be released. Now, everybody's going to be looking for that news release because we haven't had an NFP in an eternity right now. So this is definitely going to shake the market. So watch out for that. And I did read somewhere that we're going to start getting some important news releases on the 26th. So you can see, yeah, unemployment claims here, GDP is going to get released, and the PCE price index right here. So next week, we're going to keep getting even more and more news. So make sure to be monitoring your economic calendars and, of course, be checking the news outlets for all developments, of course, China, Trump, governments, and all of that sort of stuff. So with that being said, let's check out the charts. Fanatics, I spent 1.5 months putting together the Fanatic Bootcamp that is designed to help you exit the break-even stage with just 2 simple tools and 6 hours of content. Now, if you have been loving how I analyze the market in the weekly outlook, if you have been loving how I trade and how I think about the market, this is really going to show you everything that I do for an extremely small price. So we're going to be working on your mindset first, fixing your mindset, your limiting beliefs, and exiting your emotional cycles. Then I'm going to be giving you the 2 tools that I use, only 2 tools, so you're going to actually know what I'm doing in these weekly outlooks. And then, of course, I'm going to give you the process and the mechanics for it so you can actually build it into a trading plan. So if you're interested, first link in the description, click on it, and I'm going to see you on the other side. All right, you know the drill. As usual, getting started with a DXY. Let me first plot my results for this week. So yeah, overall profitable week. It was a little bit rough. On Tuesday, I took a stop loss on gold, and I think I took some ES hits as well. So this is combined for my futures and gold performance, but overall managed to pull out a profitable week. The previous one was also profitable. So far, the monthly is looking green. Let's hope we continue the same way. And of course, the most important thing is to finish green and just focusing on flowing with the markets. Now, I do believe I'm going to start adding back because I'm not sure if you've been following me for how long, but I was trading only gold right now for the last months. And while it is going good and I'm discovering new setups, I'm also discovering that my edge is starting to perform incredibly well across the Forex pairs, EU and GU. Namely, so I think I'm gonna slowly start adding them back in because like literally every single morning analysis that I do for my community tends to play out amazing. I've been doing some paper trades, but I just wanted to really lock in on gold and master it, which I believe I'm getting, like, definitely not close to mastering it, but definitely making a lot of progress. So I can add another instrument to my list right now, which is probably going to be GU. Now, let's pretty much have a look at my forecast for last week. I see I gave a pretty one-sided scenario here, which is something that I don't like doing. If you've been watching a couple of my outlooks, I tend to give like 2 at least, of course, bullish and the bearish. Now, this one was to pull back into the hourly bearish imbalances that formed on Friday, to push us into the weekly, and then to expect a reversal from the weekly. That's way too much expectation. So yeah, this kind of didn't really happen. So the market opened up, it pulled back into these hourly zones, but then it chopped for a whole Monday, then it chopped for kind of the opening of Tuesday until we rushed lower all of a sudden. There were some good setups, by the way, on the lower time frames here, 15-minute and 1 hour. And then Tuesday into Wednesday, chop, 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 chop. And then pretty much Thursday again, like New York session, that is when we also rallied lower. So the only kind of good trades this week were Tuesday and Thursday on these flushes, if you manage to catch them. So yeah, we can take a look at EU and GU later on. But let's see, what are we going to be expecting for this week, which is pretty tricky right now with the US government back to work. We're going to start getting a lot of news releases, which I do believe are going to determine the next wave for the DXY, because right now I'm pretty two-sided on this. We're pulling back into this weekly bullish imbalance after a recent kind of an uptrend, but is that uptrend, if you zoom out a little bit, can this uptrend be a lower high here on the weekly? Okay, because we have been kind of making lower highs recently, or are we just gonna start popping higher and pull us back into that monthly imbalance? That is the very key question right now. And if we go to the daily time frame, it is not giving us a lot of signs. So we tapped into this weekly imbalance here on Tuesday, gave a little bit of a reaction. Wednesday tried to push, failed. Thursday actually gave me signs that this weekly bullish imbalance doesn't want to hold as much. And then Friday also kind of, yeah, pretty big indecision. We did create a very small daily bearish imbalance. Now, when they're so small, I tend to not draw them, but in that case, it's important. Now, if you also zoom out a little bit, which is something that I have been doing very recently, you know that I used to trade a lot of market structure, and right now I kind of do see it automatically, but I no longer do like very like just breaks and trend changes. No. So what is the market structure doing recently? It's up. Okay, you can see from this low, higher low, higher low, higher low, higher low. Can this be another higher low to pop the market higher? I do think it's a really good positioning for the DXY to potentially go higher, because we have weekly imbalance, we have this daily order block here, this demand zone, and we have an overall trend line, and we have, of course, these higher low formations, which to me is pretty good. Okay, now in order for the market to really show me that it wants to go higher, first what I need to see is this daily bearish imbalance to fail. Okay, if that fails, so right now I'm gonna transition onto the hourly, but do we have something else on the daily? Like, this is going to be potentially the bearish ultimate targets, because there is nothing else to stop it. Okay, on the hourly time frame, I can take this low, that is a more recent low, and you can of course mark them up. That is hourly and that is daily. Okay, and right now if I zoom on the hourly time frame now, yeah, this sort of price delivery is definitely not giving me much to work with. We have that daily imbalance above us right now. We did tap into this hourly zone that got created here on Thursday, tapped in, massively reacted, created equal lows here. Okay, unfortunately, everybody, yeah, with this crazy development, I don't have much to say, okay? And a lot of you are right now gonna be like, oh shit, like, he doesn't have much to say. Well, let me skip the video right now and go watch another one. Well, that's trading. Not always it's gonna be super clear, and your job as a trader is to literally right now wait to see where the market is going to guide you. Okay, we're having that daily resistance. If the market comes in, reacts, breaks, and if we also emerge above the 50 EMA on the hourly time frame, that is only when I'm gonna start looking for longs. Okay, because currently it's pretty mixed up between the time frames. So weekly is kind of the market structure, and the weekly is bearish, but we have a weekly bullish. The daily is bullish, right, making higher lows, but the hourly time frame is bearish. So when you have all of that confusion between the different time frames, it's not a good idea to be like really looking for big moves. The market on the hourly time frame right now, you can see it's beautifully making higher lower highs, right? So that is a pretty big bearish sign. That could be a lower high for the market to flush. Meanwhile, it also could be a daily higher low for the market to push. Okay, so you gotta watch very carefully right now and really judge what the next move is gonna be. Watch the hourly imbalances. Like if we open up and we start popping higher with a hourly bullish imbalance, then we're gonna tap into the daily. If that daily shows us signs of failure, and if the market emerges above the hourly EMA, then we're gonna start getting the longs. Okay, but if the market opens up, starts printing bearish, then we target this low, number one. We target that hourly zone, and if the market really persists below these lows here, we're probably gonna go for the daily liquidity as well. So that is the DXY. I'm neither bullish nor bearish, because we're sitting kind of in a very tricky, both a very tricky hourly lower high and also a very tricky daily higher low, which are two opposing things. So we really have to see where the big boys are gonna take price. All right, let's check out EU, which did provide some amazing setups, by the way, this week. So what my forecast was here, I was a little bit more detailed on that one. We did have this hourly bullish imbalance formed on Friday. Of course, one of the setups could have been for us to pull back into the daily, and then the other one was to just rocket towards this liquidity target right here. And then I had another one right there that didn't get reached. Now, the market did not pull back into that daily, which is why it's always important for us to flow with the market. The market broke above the hourly EMA, retested it, but then it started to consolidate. Okay, then we pushed, we took the first liquidity target, making a high formation, right? And then of course we start seeing, okay, the bullish structure is maintaining, and then you had this zone to trade from, and then you also had this zone here to trade from. Okay, and then the market just continued. There were some beautiful setups, but again, I probably have to do some breakdown videos, but I did see that these are not being watched. Like, I don't know what to make anymore to be watched, and I'm kind of focused more on my own trading right now rather than content. So yeah, ultimate liquidity target here that I had got achieved. So how do we get there? This is, of course, guys, nobody knows. This is why the only kind of most important skill to be a trader is to flow with the markets, not make forecasts, but just flow and allow the market to guide you. Now, let's see. We are so immediately looking at this EU chart. I am a little bit more bullish than bearish. However, there is a very big problem right here on the daily time frame, very similar to the DXY, is that we have been making beautiful lower highs. Okay, that is a beautiful bearish trend, and this right here could just be another lower high for the market to start flushing. Now, fundamentally, I don't know whether to be bullish or bearish on the dollar. Maybe some of you guys that are monitoring more fundamentals and macroeconomics, you can tell me what do you think. But I have been seeing this recent bullishness, and I think there is currently almost nothing to stop price from going towards that high. Okay, so that high to me is having a pretty big likelihood of it to get taken. Then I drop to the 4-hourly time frame, and I see I don't have anything bearish on the 4-hourly. We're just made a potential pullback right here. And if you just then go to the 4-hourly time frame, what you see is exactly the opposite to the daily. We're having beautiful higher low formations, and this can be just another higher low for us to pop that liquidity level here. Okay, so my outlook is kind of going to be very simple. Like, we only have this daily zone to work with. Within that daily zone, there is also this 4-hourly zone that is just nested below it, which makes it a double support level. Okay, so the market can tap in right here, and if it gives me a long setup, okay, we can be targeting liquidity number 1 and of course liquidity number 2. It's gonna look like that. Now, of course, okay, always think about the bearish scenario. What if the market opens up and just destroys this, and then like breaks below the EMA, makes a hourly bearish imbalance below the EMA, the DXY suddenly decides to really start popping, okay, because NFP turns out to be very good and the DXY really pops. You gotta be flowing with the market in that case, okay? But for now, I would say I prefer the long scenario. Now, how is it going to play out? Is it gonna first tap the daily and give us a long setup? Is it just gonna rocket towards the liquidity and then make a reversal? Okay, this is outside of our control, okay? But I'm giving you again 2 scenarios. However, I'm always gonna give you my preference, which in that case is the bullish one, okay? Because we have 4-hourly and daily bullish, market structure is bullish on the 4-hourly. The daily time frame is in a very tricky area right now. We are at a daily lower high into the daily EMA that you can see historically is acting as very strong support and resistance, right? You can see beautiful support here, then broke, retested, resistance, and right now it's coming to act as resistance again. So if you try to long it from here, it's not the best position, but this is the setup that we have right now. So I'm gonna be trying to long it, see if it's gonna guide me towards the liquidity, and if it drops very strongly and starts turning bearish, well, guess what? We're gonna have a lovely time, because then it's going to expose all of these targets and we're going to have a really fun time trading it to the downside. Okay, so I don't care where it's going to go. All I care about is to get a clear setup for me to strike on it. So that's EU. Let's see. So GU, by the way, this week gave some incredible opportunities, but there were a little bit more intra-session, which is exactly how I currently trade. I just managed to catch like one full hourly candle. Okay. Now, what you see right here is like my forecasts were pretty nice, actually. So we had that 4-hourly bullish imbalance that broke the EMA, and we just have that weekly imbalance above us. Now, one of my forecasts was for the market to just tap that 4-hourly, get us into the weekly. But then what is going to happen from that, we don't know. All right, and this is exactly what happened. We pulled back, we popped. That was it was a really nice trade on Monday. A couple of my community members took that, okay? And then from there, you can see I had this daily imbalance as a potential target. And then, of course, are we going to reverse from that daily, or are we going to break and head for the liquidity? Well, you can see the market tapped and reversed and came to take the liquidity, right? But we cannot really know this when the market opens up, okay? So pretty much we had a beautiful long trade on Monday. Tuesday was a little bit chop. On Wednesday, it was a beautiful short trade into the daily, okay? And then on Thursday, it was a beautiful long trade into the reaction here from the weekly, okay? Now, if I break this down again, you're gonna see we're having a pretty massive kind of squeeze of price action right here between different zones. We're having a monthly bullish imbalance. That can be a monthly higher low. That is pretty crazy, okay? Monthly is bullish, however, weekly is bearish. And the market is breaking and retesting the weekly EMA. Now, that is a pretty bearish sign, but we're bullish on the monthly. Okay, so monthly bullish, weekly bearish, daily bullish. All right, so which are we going to listen to? Now, looking at the candle anatomy here, the market tapped into that daily. It tried to push, however, it failed to close with a body above that reaction. So to me, this weekly imbalance is still acting as really strong resistance because the market didn't really show me that it wants to break. So we really have to be very careful into the incoming week to see how is the market going to exit right now. This is what I call a transition area. Okay, transition areas or accumulations or distributions, they usually happen either at the end of a trend or at the beginning of the trend or just into a period where the market just wants to stop for a bit before the very big move, right? It can be, of course, like this is the good old supply and demand patterns. It can be a rally, base, right, and reversal. Now this base is your transition area, or it can be a rally, base for another rally, all right? Or it could be a drop, base, and a reversal, right? We just gotta wait, right? And you're gonna see that it's always gonna have these sort of transition areas getting a little bit choppy, and then it just starts to rock. So currently we're stuck in the monthly, daily, weekly, right? And even the quality time frame, if I jump into the quality time frame, it's a little bit nonsense right now. I told my team on Friday, guys, today we are not trading. The market was having bullish zones, it was printing bearish zones, it had some absolutely crazy whipsaw here at the beginning of the day, and then during the whole day, it never exited that whipsaw, okay? So currently, unfortunately, for a lot of you that are looking for signals and for somebody to tell you where the market's gonna go, we don't know, all right? We just don't know. Now, mark your liquidity levels. This is liquidity, and of course, this is liquidity that is on the quality time frame. Let's see where the market is going to break out. Okay, that is also the daily reaction. If the market right now starts really becoming comfortable above these highs, that is the bullish setup. But if the market drops below right now, breaks all these liquidity levels and forms bearish imbalances below, then we can be headed for that ultimate low right here, because this daily zone tapped, it tries to push. However, if it fails its job to push the market higher, it's going to become liquidity. And when it actually gets taken as liquidity, if you see that the market is actually following through with bearish imbalances, that gives you a sign that the sellers are taking control and they're going to seek the ultimate liquidity, which is going to be that low. However, if that daily zone does its job to push the market higher, then what that is going to mean is that the weekly time frame is not doing its job to push the market lower, right? This is how it works. That's supply and demand, all right? And then the market is going to start seeking liquidity on higher levels. For example, this can be like an ultimate liquidity, but before that, you should be aware that we have 1,000. So we have the daily reaction area here. The market's gonna stop right here, and then we also have a daily zone here. So you're gonna be targeting them one by one. Okay, so bullish scenario, we break up, tap into this, react, push into the other one, tap into it, react, ultimately towards this target. And of course, the bearish one is gonna be breakout below these lows, clear bearish sentiments, and then of course we see for the short. So very 50-50 on GEO right now because it's really stuck between all these hard time frame areas, so you gotta be extra careful. Okay, on EU I'm a little bit more bullish. EU has been in general a stronger pair. You can see on the quality time frame the EMA is pointing up. We're making higher lows and higher highs. Look at the quality EMA on GEO. What that tells me, why I love using the EMA, is that it tells me if the market is trending or not. When the EMA gets flat and the market is just crossing it up and down, that is a clear sign of a consolidation, and we're just oscillating in the middle between that consolidation. Okay, so that is GU. I am personally waiting for very clear signs of breakouts, and then I'm gonna trade it when the direction is clear. Let's check out those dollar. Now this one was a little bit tricky. It was definitely looking more bearish, honestly. Like you see, we have daily bearish imbalance, we have weekly bearish, we have quality bearish. However, again, have no expectations and always think in terms of scenarios. I gave you the bearish scenario for the market opening and following through lower. I also gave you the bullish one of the market popping higher, and then I gave you a scenario for a sweep. If the market comes and takes out that high and then it reverses with a bearish imbalance, we can short it. But if it closes above with a bullish imbalance, which I drew again last week, and you can see this is exactly what the market did. There is our hourly bullish imbalance here if I delete the lines. So I can see it, pullbacks into it, consolidates, and then it headed for the ultimate liquidity at the end of the week, and then it reversed. Okay, so again, this is why always think in terms of scenarios. Now I can kind of try to predict a little bit how price action is going to do, but that is not a very good thing to do, honestly. So this one is a pretty choppy. I just don't like this pair at all. I used to trade it a lot, but then it just got all chopped up and crazy right here. I was having great success with it when it was flushing down right here, but then it just started getting in that crazy chop, this Aussie dollar. So I don't think I'm gonna touch it anytime soon. This is a consolidation, everybody. So daily bullish imbalance here, daily bearish imbalance here, taps the daily bearish, fails. Right now taps the daily bullish, probably gonna fail. Daily EMA is also pretty flat. We have all sorts of liquidity below us. All right, we did build a liquidity above us as well. Going on to the 40 time frame right now, we did tap into this daily zone after 1,000 days. So this daily zone got made here, never pulled back, pushed all the way up, and right now it came in. And outside of that daily zone, we did make a little hourly bullish zone. Now, this kind of looks like not a bad buy setup, but it has so many negatives, okay? The first negative is that it's we're in a consolidation, and we're exactly in the middle of that consolidation. So trying to call a push outside of the middle of the consolidation is a bad thing to do. You better trade the edges, okay? If you draw like a fib, okay, and if you like, yeah, you can't see all the levels, but you're better off not trading in the 50%, which is exactly right here. Like, you can't see it, but anyway, not a good position to be trading this thing. EMA is kind of starting to get flat. Now I can say a setup like that looks pretty good. All right. So if the market gives us that and continues to follow through, we go for the liquidity. If the market invalidates hourly, we go for the opposing here. And then if the market breaks strongly below that low with the hourly bearish imbalance, okay, then that guides us into the lower liquidity level. So that is my forecast. Okay, we have to see now. It kind of looks a little bit more bullish, but it's not enough to just go and see, okay, daily bullish, hourly bullish, let me go long, right? You have to also read a little bit what has been happening. And what's been happening is we're just in a massive chop, all right? We had a crazy consolidation. We tried to go long, then we go short. We tried to go short, then we go long. Right now we tried to go long. I wouldn't be surprised if we go short, okay? So be careful with the longs on Aussie dollar. It is pretty choppy, okay? That is the setup. That is the determining imbalance here. If that holds, we go long. If that fails, we go short, okay? So let's see how this one is going to respond and what it's going to do, and then we adapt based on what it does. I remember last week NZUSD looked so bearish. Like, it had a weekly bearish, it had a daily bearish, it had a hourly bearish. It was looking so bearish, and then just look at it, right? It opens up as we forecasted. It pulls back into the hourly time frame. But then what did I say? All right, so I want to see the market to tap here, but then to make a new bearish imbalance. You can see my rectangle right there, and then that to start guiding me lower. What did the market do? It tapped in, and it just gave a reaction. Do you see an imbalance here? No. All right. This is why I love imbalances, because they show you the momentum. Okay. Where did the momentum come in? It came to the buy side right here. So you have to flow. All right. We're starting to make highs, higher low, higher high. Liquidity is starting to get exposed. The market gave you a hourly bullish imbalance. The market taps, bingo, liquidity taken. That was kind of your trade of the week if you were trading NZD. And then on the way up here, it swept liquidity and it did not have any bullish imbalances here. So what does that mean? There is no volume. So this push is weak. What does that mean? It's going to go for the liquidity. Bingo. Came, took the liquidity. All right. And then from there, it got pretty nasty. There's some sort of news right there. Sweep up and down. Pulls back higher low again. Overall bullish week, but kind of a little bit choppy. Now let's see if something changed on the weekly. Do we have a weekly imbalance? Well, we do. Okay, so weekly imbalance. Now that is pretty important for next week. Are we going to tap that weekly imbalance, and are we going to reverse from there? Now on the daily time frame, what is nice about the daily is that so far we don't have anything bullish on the daily. So we don't have a daily bullish imbalance to give us a lot of bullishness. All right, that's good. And then on the hourly time frame as well, like coming into that weekly imbalance, we don't have like bullish imbalances. The only bullish imbalance we had was here. That was the tradable setup. then nothing here and nothing here. Okay, so for me, also the structure is turning a little bit bullish. That is a problem. So in order for me to take a short trade on NZUSD, what I will need to see is tap into the weekly, break below the EMA, hourly bearish imbalance is forming, and then potentially looking for the shorts that are going to look like that. Okay, and of course, hey, the bullish scenario, tap in that weekly, react, break above with imbalances, then of course know where your next liquidity is going to be, which is going to be right there. So that's NZUSD. I do like the shorts of it because we're going to be tapping into a weekly imbalance, but just because we tap into a weekly, I actually trust the lower time frames more these days. It's kind of have been a very big mindset shift for me because it's the lower time frames that are building the higher time frames. So if you understand that the lower time frames are right now reversing, then your higher time frame zones are not going to form as much, hold as much importance, because if the very recent sentiment of price and the fundamentals change, price is going to reflect first on that. So if you understand price, this is what I believe, then you don't need to understand that much of the fundamentals. Okay, so let's see. Weekly imbalance is going to be the determining point of this week's price action for NZD. Are we going to sell off from there, break some structure, okay, form bearish imbalances to sell, or are we just going to invalidate it with bullish imbalances and continue higher towards the liquidity? Let's see. All right, let's go gold. It is very interesting. Now, again, just as I was making my weekly outlook last week, the market was in that transition area, okay? After a massive drop, it created the base stuck between the weekly bullish and the daily bullish. And just on Monday, as usual, the Asians started buying gold and just absolutely rocketed, and pretty much it made a massive weekly move on Monday. All right. Which sucks. And then again, it made it pretty hard to be trading right there. And then on Wednesday, it made another pop, very hard to catch, by the way. And then the easiest catch here was on Thursday long, right here. And then we had a pretty big reversal, okay? But still, I did take a stop loss on Tuesday. Yeah, I did take a stop loss on Tuesday trying to long it, all right? But then the market decided to make a little bit of a pullback. That was actually my loss. Then there was a win somewhere else. Yeah, probably on Thursday here. Friday, I didn't trade, or did I? I don't remember even anymore. Trade, even within this is getting distracted. Now, let's see what is happening. The market did tap into that weekly and it tried to push, but it was met with a lot of very big rejection right here. I did see that money starting to flow into bonds a little bit. Now, this monthly imbalance to me and the 38 level is still pretty nice. All right, pretty good looking. However, it's not about what is good looking, but what is going to happen. The market is tapping into a support level right now on gold. It did create this very nice push, okay, and it did pull back into the overall resistance area here, which is that daily zone. Okay, so the market tapped into this daily, what I would call a reaction area, tapped into the OB right here, that last buy before the very big sell-off, and it reacted very heavily from it. Now it's pulling back for a potential daily higher low. Okay, like the daily time frame, of course, we had this very steep uptrend, but now we did make a very deep pullback. All right, so that pullback is looking like a weekly higher low, and right now on the daily time frame, we kind of stepped up a little bit. That is a potential daily higher low for an expansion. However, the 4-hourly time frame sold off very crazily. So we first have to deal with that massive bearish trend on the 4-hourly, because it made that trend change right there with a 4-hourly bearish imbalance pullback, beautiful short on Friday. And then it's right now having a 4-hourly bearish imbalance, and it's starting to break below the 4-hourly EMA as well. Now it is also tapping into the very last supportive region right here. This is the 4-hourly reaction area, okay, but it's also nested inside the daily. So this reaction area is just a more refined thing, but I would still keep the daily. The liquidity to the lows is going to be here, okay. And yeah, so right now, fundamentally, if money is starting to flow elsewhere, which is bonds, and if money starts flowing in the dollar, if NFP is good and if everything is good, we might see gold decline a little bit, okay? But that can just be a little bit of a profit taking after that bullish move for the market to accumulate a little bit more, to retest this overall demand area here, okay, and then to potentially start rocking. Like you can see, there were absolutely crazy volumes accumulated within that area. So for example, the market coming to retest a zone like that is very likely. Now we did retest a little bit of it, so are right now, for example, the big guys going to start jumping in again into longs? How are we going to know? This 4-hourly zone right now is going to be the key determinant of that, okay? Is the market going to tap react and give us a short setup to trade towards the liquidity. Now, if that happens, I can already say it's probably going to come and take out that low. Is the market going to tap in that hourly, react, break? Then we go for this liquidity. And if the market persists with more bullishness, then it can definitely even go for that high and just start rallying again. Because when the sentiment on gold gets good, it gets good. It starts rocking like crazy. So that is gold right now. Like this hourly time frame here is the determinant. I mean, yeah, I'm not gonna type that one, but yeah, you get the point. This is going to really determine what is gonna happen next week. Is it gonna fully break? If it breaks, we have the liquidity levels. Is it gonna hold? Then we also have the liquidity levels. You see, that's how freaking easy trading is. Trading is not easy, it's hard. But a lot of traders are making it hard by drawing 1,000 things. All you have to do is just have a zone and have a liquidity level and just wait to see which zone is going to get responded and towards which liquidity price is going to guide you. Right now, it's not going to make any sense for me to say like it is going to tap here and go down. I don't know that, right? Or is it just going to go up right now? I don't know, and I don't care, because price is going to show me what it wants to do, and I'm going to be detached and I'm going to strike on the setup that is presented. Okay, so enough of the rant. Of course, gold fundamentally pretty bullish. Are we going to go for a new all-time highs, or is this going to be a macro lower high for the market to go lower into the 38s, okay, and into the monthly imbalance? I'm very interested to see that. We have our levels, we have the determination point, which is this hourly zone. So let's see how this hourly zone is going to go and where the market is going to guide us. USDN was an extremely choppy pair this week, so yeah, kind of it opened up nicely. It opened up bullish, and it did print a hourly bullish imbalance like I indicated. Eventually it tapped it and it provided a long setup, not bad on Tuesday, not bad, and then it just got all crazy choppy. So not looking to trade this one at all right now. It is in a little bit of a chop. Weekly time frame, it kind of keeps trying to make its way up, but it's very weak. Daily time frame, no imbalances, so it came in to take out that high, and then after this right now we're making a pullback, but we're not making that pullback into nothing. So to me, even that means this low can potentially become weak. Okay, and then on the hourly time frame, yeah, so no imbalances whatsoever here within the second half of the week. So here we kind of had a bullish imbalance, tapped in, reacted, maybe you could take profit. The overall profitable trade was from this imbalance. That was the first imbalance that formed on market open. And yeah, so right now, did it sweep? Yeah, it came in to sweep this liquidity where the week actually opened, and then it massively rejected. So is it going to guide us higher right now towards the bullish zones? Or is it gonna go lower, right? I know you guys are gonna hate this, and like I had a comment last week like, okay, so you can go bullish or bearish. Well, that's trading, honestly, right? It can go anywhere it wants, and if you're still that guy who thinks that you should always know where the market's gonna go, you still have a lot to learn and a lot of years in the market. So yeah, when it's not clear, especially like this, like we don't know, there are no zones to work with. Now, of course, depending on your strategy, you might have a zone. You might say, okay, the market is right now in a fib level here, and I'm long bias towards the 27 extension. You can definitely do that, right? Or you might say, well, no, the market is right now in this macro supply zone, right? And I'm looking for shorts. You can't say that, right? It really depends on how you trade, how I trade, and how, if you're watching me like if you like how I trade, currently the market doesn't have any setup, so nothing to say about that one. Just looking for the fresh full hourly imbalances to give me the direction, and then I'm gonna strike in that direction. If you are a futures trader, you have to go and check PropShop Trader right now because they're running a pre-Black Friday sale. So you're getting a 70% off of the instant gladiators, and there is no code needed for that. And also for their evaluation accounts, they're also running a 70% off, but with code TradingFanatic90, you're going to get it for 90% off. So if you're looking to get a warrior account, that is their evaluation account. If you want to get tested, okay, your 50K account is going to be discounted at 90% with my code TradingFanatic90. And of course, if you just want to go straight to fund it, right, with their gladiator account, then you don't need to purchase anything. Right now, it's 70% off, which is an absolutely crazy price that you cannot find anywhere. And they are, by the way, a prop firm that pays, and they're sharing also proof of that. You can see proof of actual payouts weekly. You can see all the certificates. Their reviews are actually amazing. Okay, so make sure to check them out if you're looking to scale into some more capital. Very easy rules, very straightforward as well. Everything is good. I've been testing them. Everything is so smooth. So totally recommend them. Click my first link in the description. Go for that and make sure to capitalize on that pre-Black Friday sale, or use code TradingFanatic90 to get it a water evaluation account for 90% off. Alrighty, let's have a look at the charts for futures. Starting with ES, the overall forecast was to go long and we went long. We broke above the hourly EMA, and most importantly, we broke it with the hourly bullish imbalance, tapped in beautiful long here on Monday. Beautiful long as well on kind of on Wednesday actually here, going into, no, that's Tuesday. Tuesday, beautiful long. And then some really good shorts. Now, it was like on the hourly time frame, it looks pretty good, but the time that I trade, which is 10 a.m. Eastern, the market already started compressing. So I had an overall hard time this week with futures because they all got so compressed by the time I actually traded. Now, let's have a look what is happening. Weekly bullish imbalance. Now, we came in, we tried to go out. Actually, this weekly candle is an inside bar, okay, of the previous weekly candle. So that is an important thing to know, because that means a potential breakout can ensue. There is that high, there is the low. We came to sweep liquidity, and we're tapping right now into the daily EMA, which is always a very good support level. I did buy some stocks here. I didn't buy again here because I wouldn't like to buy at the same price point if the market decides to flush a little bit. Now, on the way up here, it didn't go towards all-time highs, which is interesting. Okay, it did have a daily bullish imbalance, but now that daily bullish imbalance is failing with a daily bearish one. So that kind of gets me excited because we might go lower. Okay, we tested like the EMA right now 2 times, but if we start closing below it on the daily, that can expose some lower liquidity targets. Right now, we haven't seen that in a while, right? But yeah, like usually I would expect a reversal if you really start oscillating around the EMA, right? And if you start kind of really breaking and closing below it. So far, we haven't really had a closure below the EMA, which is something that I always look for investments. And I do have quite a few more EMAs for targets to the downside, but yeah, then we dropped to the 40 time frame, and on Friday actually the market kind of opened up a lot lower if you're looking at regular trading hours, but overnight it really sold off. Asia and London sold off, and then New York just opened and it just, whoa, massively rocketed, creating a 40 bullish imbalance. So we're once again stuck in a little bit of a transition area right now. The market pushed and it dropped very heavily. It seems like this kind of region right here is very sensitive. And if you remember from a previous outlook, I kind of drew, oh, not that one. I kind of drew an overall volume profile of this sort of range, right? So kind of there are, like you can see here, it gives me like the most orders are accumulated there. But if you take it like just a little bit like that within this range, you can see like exactly here is where like the bulk of the orders are. So when the market starts coming into that range, it is very sensitive. So what we have to be looking for right now is for bullishness or bearishness. Now, we're currently stuck between that hourly and daily zone. Now, how is the market going to play out? We don't know. Is it gonna tap the hourly and guide us into the daily? And then is the daily going to reverse towards liquidity, or is the daily going to react, break, and continue towards liquidity? Is the market going to tap the daily and then tap the hourly and then go down? Okay. We don't know, everybody. Nobody knows. So you always have to think in terms of scenarios. Now, am I bullish? Am I bearish? I'm neither, because I only trade for 2 hours per day. So being long-term bullish or bearish, I'm long-term bullish. If you ask me always, I'm going to keep buying if the market drops, but I'm also going to trade it short on the way down. If, of course, during my trading day, when I open up, the 2 hours that I trade are bearish, I'm going to short it. I don't care. Okay. But of course, for now, I would definitely wait to see how these 2 zones are going to react. Okay, is the market going to tap into quality first? Okay, and then give us and drive us into the daily. Let's see. Then what's going to happen from the daily? Is it going to start reversing, or is it going to start going into the higher liquidity levels? We are going to see. I would expect some sort of a breakout this week, especially with NFP being released as well. So let's see. That is ES. I'm not bullish. I'm not bearish. This drop here kind of is sketchy, because we came and accumulated, but then the push from here was so big that I wanted to rebalance it. But then right now, why are we rebalancing it with such a strength as well? But this tends to happen, right? You can see here we flushed, And then we flushed again, and then we pushed again, right? And then it finally resumed for the uptrend. So we can be currently stuck in an area like this, all right? Massive flush, massive push, massive flush again. So eventually, as you start seeing the market again break above, higher low, pull back into EMA, into daily demand, for example, then you start getting the good setup. So in transition areas like that is where traders tend to lose. So if you don't know how to spot them, well, you're going to be taking stop losses. So that is ES. Really looking to see how that daily is going to go, because we're also breaking below the 4-hour EMA, which means a lot of recent sellers. But if we start breaking above it with some 4-hourly bullish imbalances here, I'm definitely going to look to long. But also I'm going to be interested to short, so let's see. Well, tech stocks are getting a little bit of a beating right now, and you can see Nasdaq was in fact a lot weaker than ES. It actually came to take out that previous weekly low here. Now, on the opening again, we did have the bullish introduction here. We had a lot of quality bearish imbalances, but it did take all of them and reached kind of a specific point in time here where it didn't manage to keep pushing towards this daily zone. It stopped, it kind of tried, and then it just flipped with that quality bearish imbalance, and it just died, right? Nvidia dying a little bit, Palantir dying. A lot of these tech stocks are really nicely dropping right now. So daily bearish imbalance as well, pretty interesting. However, into daily bullish EMA. So we have a lot of these contradicting factors right now. It came to collect a lot of liquidity from here. And then right now, again, it had a massive reaction in the form of that quality bullish imbalance. So again, usually Nasdaq and ES are very similar. Nasdaq does tend to have bigger moves from time to time because, again, it's a tech index, right? And tech stocks tend to be the most volatile. And but they also do drive ES. Okay, so ES is usually going to move with Nasdaq, but a little bit slower. This is why I kind of trade ES. I'm not Nasdaq. But yeah, again, what's going to happen? We're going to tap here, and then see for reversal, or are we going to invalidate that daily and potentially go higher? Now, this truly depends, of course, on the tech stocks and how they are going to perform. We still read every day in the news, crash, 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 crash. I don't think there is a crash, but I do think there is a need of correction, which we're currently getting. We're getting a really nice correction, and in fact, the market is turning, if you kind of look into it, it's turning into a little bit of a downtrend. So usually when you get these dips, all right, they tend to be like very sharp dips like that. This one is it is sharp, honestly. Like this is sharp as well, right? But if it turns into a downtrend, now that can be bad. All right, like this downtrend, that can be bad. So watch out. If we're gonna go bullish, we should definitely start recovering very soon. But if we continue maintaining these followly bearish lower highs right there, not good for stocks, but it's going to be good because we're going to buy more of them as it crashes. So that is Nasdaq. Once again, 2 decisive points here, the quality bullish and the daily bearish. Let's see what is going to hold, what is going to fail, and then we're just going to flow with it. I mean, wow, YM is doing some crazy shit right here. It just absolutely went ballistic and then just absolutely went back down in the same ballistic manner, right? So this is pretty crazy price action, right? It invalidated the weekly imbalance, massively pushed. It took liquidity like crazy, took it. It created a daily bullish imbalance, and then suddenly it's making a daily bearish imbalance. So that is a very interesting price action here. It is tapping also into this lower ends of the overall daily bullish range. So is it gonna go and take the liquidity? Maybe. Quality time frame, in that case, you can see the other currencies made a quality bullish imbalance. That one is very heavily bearish. So there are some stocks that are really weak right now within these basket of 30 stocks. Okay, we did take the very last liquidity here, and then of course the other one is going to be this low. So let's see. Of course, this one tends to move with the others. So if we pull back here, are we going to sell off for the liquidity, or are we going to react, break, and continue higher? It is really bearish though. Now, this is very strange. Massive pop for a massive drop. Are these buy stops here going to get suffocated? If they are going to get suffocated, then the market should start potentially to go lower and start attacking all of these lows here to take out some stop losses of buyers. So let's see. Again, I'm not bullish, I'm not bearish. It's a very strange delivery. Now, this one is again at all-time highs. It's pretty high. It is very normal to get behavior like that. So we're going to be needing like a deeper correction and some liquidity. You can see, yeah, when it starts reaching at these all-time highs, it starts like chopping until we get a pretty crazy drop, which we're getting right now. And then, of course, it's going to have a stabilization period. And then finally, we're going to start going higher. So for now, watch this daily zone. Watch that daily zone. If it's really bearish, it's probably just going to open up and it's just going to expand lower. So watch out for that as well. There is a lot of volume in the market. There is a lot of tension as well. So when that gets released, it can definitely get very interesting. So again, I'm neither bullish nor bearish. I'm pretty indecisive about the indices right now. So I'm going to be focused on tracking the markets and flowing with them this week. The DAX index, again, it just looked like it wants to turn bullish. And in fact, it did turn bullish and give us a beautiful long. But then again, towards Thursday here, it just absolutely went down again. It did not go towards all-time highs. We can see that the market is struggling right now to go to all-time highs, even in the US indices. This one kind of really looks a little bit more like US 30. This is why I see a lot of traders are actually doing DAX in US 30. Because they kind of move very similarly. You can see, for example, that one is tapping into a daily zone, but it already tapped into that daily zone here, reacted. But you can see this is why it's always important, everybody. Like, you might have your daily zone, however, you have to be reading everything, because the very recent order flow was pretty bearish. And then, as I always tell you, right, wait to see which one is going to respond. In this case, the daily zone did not respond. The volatility gave us the bearish signal, so we could have went short and capitalized on that short. Okay, right now it's tapping into this setup right here. Now I would immediately say if that was a normal trading week, I would immediately look for shorts, targeting this liquidity here, and then of course that one there. A lot of liquidity are stocking below us. Like, we have this low, this low, this low here. That is gonna be a very big pool of liquidity if we decide to go there. But looking at the nature of the market, it's pretty choppy. It doesn't have the willingness to go for a new all-time high, and the previous all-time high was really sensitive. It just tapped it and just massively reversed. Right now, it came to collect all the stops right here. You can see if somebody's short, trail, it collected all of them to the very last one, which is here, right? That high. And it just absolutely dumped like crazy. So after that dump, after this manipulation, I would say shorts are more likely. So let's see if they're going to play out. Alright, as usual, a little bit of a recap. The DXY is a little bit stuck right now between hard time frame areas and confusion between all the time frames. Weekly time frame is looking like a lower high, daily time frame is looking like a higher low, and hourly time frame is looking like a lower high. So all of those are mixed up. Okay, so very important right now, because we close in a very choppy manner, to wait to see where the market's gonna guide you and just have your liquidity levels. Similar thing for EU. However, in EU, I'm a little bit more bullish. I do believe that this high here is starting to become very vulnerable, because we're getting very close to it. And right now, there is almost nothing to stop price and push it lower. We're also having daily bullish and hourly bullish imbalances, and also a bullish EMA. So I'm more long bias on EU. Okay, but of course, I'm always going to be listening for the short side as well. GU, on the other hand, is very 50-50. The EMA is very flat and is stuck between the monthly bullish, weekly bearish, daily bullish, and daily bearish, and hourly bullish and hourly bearish. Like, this is just right now a very choppy market stuck in a transition area. So once again, we have to wait for the signs of breakouts. Aussie dollar and NZD dollar are kind of, Aussie dollar especially, it's really choppy recently. So like, you just have to flow with it. No need for any expectations here. NZUSD created a bullish week this week, but it created a weekly bearish imbalance. So if we tap into that weekly bearish imbalance and then get the short signal, definitely go for it. But if that weekly imbalance doesn't do anything, then go for the longs as well. Gold, also very key scenario right here. It's a very similar situation to DAX, for example, where we have a daily bullish and a hourly bearish. You have to see which one is going to hold. We have a daily bullish and a hourly bearish. Let's see, can the market tap into hourly bearish and continue that recent sell-off and guide us into the lower liquidity? Absolutely possible. Or is the market going to tap, react, and fail to guide us into the highs? We're going to see. Gold is in a very tricky situation right now, so we really have to be very careful and listening to what the signs are telling us. USD/JPY, very choppy. We just need to wait for some imbalances. And indices as well, very similar to kind of to gold and even the DXY. I'm seeing unwillingness for the market to go for new all-time highs. So we're starting to see like a little bit more of a proper kind of correction. So is it going to go down a little bit more? This is not a dip. This is like, dips are usually very fast bursts of price action to the downside. Like dip here, like dip here, quick dip here. This one is starting to get a little bit more prolonged at all-time highs. Okay, and a lot of talks for the crash. So let's see. I'm going to be very carefully monitoring the daily bearish and the hourly bullish on both on S&P and Nasdaq, and then of course react to them based on what price shows me. And that's pretty much it, everybody. Let me know how you performed this week. Let me know how is your month going so far. Let me know what you think about the fundamentals, of course, and also the pairs that you're trading and specializing in. Hope to hear from you in the comments, and of course I'm gonna see you in the next weekly outlook.